You got to 5 million because we have a grid to show it. It's that gold would be doubled in price.
Daniel, previous chart.
Yeah. Gold would double in price.
So this is if crypto reaches parity with gold in terms of market cap?
Yes.
Okay, it's not there already?
No, it's only 10% of the value of gold.
Wait, what? How much gold is there in the world?
There is
10?
$21 trillion of gold.
How much crypto? 3?
Bitcoin's 2.
Bitcoin by itself is 2.
Yeah.
Okay. So if the amount of money millennials choose to put into digital gold rivals the current amount of gold, you know what the flaw in that logic is? If there's this huge predilection for Bitcoin versus gold on the part of millennials, then the valuation of gold will shrink. So you might get parity, but that's because the amount of money in gold goes down.
Yeah. I thought about, and I got the numbers a little wrong. Let's say gold has to go to like $7,000 an ounce. However, I heard something interesting and I didn't realize gold has outperformed the S&P 6 of the last 7 years.
Yeah.
So
quietly too.
Yeah. So gold isn't a bad asset class, but Bitcoin. So I think even if it's not like millennials need to buy gold for gold to go up. You just need the boomers to hold it.
Tom Lee just made a jaw-dropping Bitcoin prediction that will leave you speechless. Mark my words. This event will trigger the biggest crypto bull market ever. According to his analysis, Bitcoin could soar to an astonishing $5 million by 2027. And he's not just guessing, he's looking at the charts, and the data is there. But what's driving this explosive forecast? Lee points to Trump's recent Bitcoin Reserve executive order, coupled with mass state adoptions and sovereign state buy-ins. The entire crypto landscape is shifting, and what's happening right now could be the spark that sends Bitcoin into an unprecedented surge. The bear market? Forget it. Lee believes that this next phase will completely defy expectations. In this video, we're breaking down exactly what could push Bitcoin to that $5 million mark. You don't want to miss out on this. Before we dive in, take a quick moment to like this video, share it with your friends, and subscribe to the channel. Your support helps us bring you more expert analysis and insights into the world of Bitcoin and crypto. Thank you, and enjoy the video.
Why would we have a Bitcoin strategic reserve?
I think it makes a lot of sense.
Why?
Well, we already have one. We've confiscated Bitcoin.
That's not, all right, but why do you think it makes sense?
Why should we buy more?
If Bitcoin becomes the backbone of a new financial system, which it really is, it's the king of the remittances. It is the immutable blockchain, and people have a lot of reasons that they trust it. In 14 years, no one's broken it, and there's no replacement. Then if the U.S. owns 1 million Bitcoin, they'll be the largest holder of Bitcoin in the world.
Just what are we doing with it? We're facilitating trade with it, or we're just holding it?
Well,
if it's a strategic reserve with a strategic petroleum reserve, they use it when there's like an oil shortage, or there's a problem, or there's a dislocation. They will tap the reserve, and then when prices calm down, they'll add it back. How does Michael's question, how does a Bitcoin strategic reserve function?
Okay.
Would there be a shortage of Bitcoin?
And we have to what end?
These are good questions, but keep this in mind. So oil's a strategic commodity.
Clearly.
Okay. Now, oil only has 7 buyers, really. It's the refiners. Oil, that's produced everywhere, it's really just bought by refiners.
Who then turn it into something useful.
Yeah, to distillates and gasoline.
Okay.
But there's really only 7 buyers. And so if you look at oil, the oil market that's bought for distillate, and then take the total trading volume of oil against that, what do you think the ratio is?
I don't know, tiny, right?
400. For every dollar of oil that's bought at a pump, it's traded 400 times on speculation.
Wow. Okay.
So you need a strategic petroleum reserve because there's so much price speculation around it that you could be whipsawed if you didn't control some way to manage prices.
Okay. So Bitcoin is the same.
Yeah, so let's say Bitcoin,
speculation around
let's say that it becomes 10% of people's net worth and banks start to use it to secure information. Because remember, the blockchain, you can just store 1 pixel of a 10 million page document, but the hash will detect if you changed 1 pixel. So that's why you're going to use the Bitcoin to secure information, right? Well, that's really valuable. But then wouldn't the US want to be able to control this blockchain or exert some way to censor it somehow?
Okay.
And, once banks start trading Bitcoin, like Citadel, it will probably be the most profitable product for Goldman and JP
Because of
Morgan.
how volatile it is,
Yeah.
bid-ask spreads are wider.
Correct. And if
Okay.
oil's traded 400 times, Bitcoin might be 1,000 times. It's going to be a hugely traded commodity.
Okay, so this is a productive thing, even though, to my earlier point, we have a budget deficit, we have tons of debt. This is a project that we should also undertake now because it might come in handy at some point in the future.
Yeah, well, the US owns 200,000 Bitcoin,
Right.
as long as it's not, those keys are safe.
Okay.
And so let's say they buy 800,000 more through the Exchange Stability Fund, so another 80 billion.
If they do that, I think the price goes to $1 million too. I just don't know that they're going to do that.
Yeah. But then if Bitcoin gets to 36 million, there's no national debt. You don't need to sell it because it's almost the same thing as like if Nvidia is 3 trillion, it's not like someone would say, oh, well, you're going to liquidate all 3 trillion, so it's not worth 3 trillion. It's as long as the value is stored at that level.
Okay.
And you can still trade
Then
it.
we could say it's an asset that offsets the debt that we have. We don't have to use it to pay down the debt.
Yeah.
We could just say we're backing that debt with this asset.
I'll guarantee you if Bitcoin got to 36 million, okay, theoretically, the US cost of debt would go to zero.
Okay.
They would have because they have zero net debt.
If you think the bull market is over, or that we've entered a bear market just because of recent sell-offs and market swings, think again. Tom Lee has a completely different take, and his insights will change how you see this market. Lee dives deep into historical market cycles spanning over 100 years and makes a bold claim. The next real bear market won't hit until 2038. And he's not just throwing numbers around. He backs it up with solid data and market patterns that point to a much longer bullish phase than most expect. So, what's fueling this extended cycle? And why does Tom Lee believe Bitcoin and the broader market are nowhere near a true downturn? Tom Lee breaks down his analysis and what it means for the future of crypto and the stock market.
The bull market, I would be surprised if it's over. So I shouldn't say no like I know because I don't know. I'm sorry. But I'd say the probabilities are very remote because if you look at all bull market major tops before a 40% drawdown since 1900, all of them could have been predicted with a 40-year lead time based on births
So you think
and immigration deaths.
that demography thing is
Yeah.
still enforced no matter what they do to try to mess it up?
Yeah, that's right. Because if you cut the population by just 20-year intervals and you mark the peak of each cohort, it marked the 29 top, the 74 top, the 99 top, 2018 top, and the next major top shouldn't be till 20. The kind that could unwind the entire bull market.
Okay.
All right, so we have more than a decade. I feel better now. You have a chart showing that the second half after a back-to-back 20% year tends to be pretty lousy.
Yes.
What are we looking at here?
This is all years that had 2 consecutive 20% years preceding it. So that's like that first vertical line says year 0. And then we're just saying, what does that 12 months later look like? And as you can see, you might be okay in the first half, but the second half is usually tougher.
Sorry, is that 1880?
I saw that too.
Yeah.
Is that like Yellowstone?
Tom was digging deep.
Okay. So this is not
We were like still shooting pistols.
Yeah.
We're not following that. We're not tracking.
so this is not wildly out of character for what typically happens after you've had a big run in stocks.
Yes.
The reason why I believe in this stuff is because it's just human behavior. Like the variables in all these years are different. Tax rates are different. Inflation regimes are different. Republican president, Democrat president, like all of that stuff is interchangeable. But the
mood.
the component of this that's not is how people trade.
Yeah, because it's eventually
It's fear and greed.
we know good news gets priced in, and it's
Yeah.
hard to determine. But then after a certain amount of time, people might get complacent or whatever you'd call it.
Tom Lee believes that a recession could go either way, depending on how various economic factors play out. He examines the potential impact on the economy and ultimately the markets, especially in light of Trump's tariff policies and immigration stance. In response to a recent Polymarket recession chart, Lee shares his insights on how these factors could shape the financial landscape.
See, let's say that gets to 50.
Yeah.
The White House is playing with fire and Fed's playing with fire.
Okay. So
And-
you
and
so
the
then
put
you
would
think
come
people
back.
should be paying attention to this?
If this is liquid, the Fed better be watching this.
Do the Feds truly grasp the full implications of this? Tom Lee breaks it down with a deeper analysis. Let's dive in.
I don't think if there's a recession, small caps outperform. So like on that downside, I don't think it's protected. But if we look at the composition here, I actually am surprised it's done so poorly because, for instance, healthcare is the best performing sector year to date, and you can see healthcare is a bigger weight in small caps. Financials have done well year to date. It's a bigger weight in small caps. Industrials have outperformed year to date, and it's a bigger weight. You have less exposure to tech, and
So what's weighing the small caps down this year?
I think it's the push button because
Just
there's-
people saying sell small caps.
It's higher beta.
Yeah, so they're derating. They got cheaper.
Okay.
Oh,
not
wow. Small
because-
caps are down 15% in a 50% drawdown. I didn't realize that.
Yeah, so that it's not like someone's doing relative value.
They're selling the ETF.
Yeah,
They're selling
just
IWM.
Selling IWM.
It's like the first thing people sell.
Yeah.
It's like, oh, you're worried about the economy? Get that shit out of here. We're not
Yeah.
going to need that. We'll buy it back later.
Yeah.
Yeah,
But as
I
you know,
agree
what's
with you.
working this year is like financials, industrials, healthcare. That's like that's already more than half of the Russell. So it should be a good index, but and I think the individual stocks have been, but as an index, hasn't worked.
So I want to ask you, do you think this is inflationary? This is CBS News this week. The number of migrants crossing the U.S. southern border illegally in Trump's first full month in office plunged to a level not seen in at least 25 years. This is CBS News. Look at this. Border Patrol recorded 8,450 apprehensions of migrants who crossed into the country unlawfully on some days. During a record spike in illegal crossings under Biden, they had 8,000 apprehensions in a single day. So what was happening in one day under Biden is a full month under Trump. And of course, this is by design. This is what he promised the voters. This is what voters want. And he's actually carrying this out. But the point is, as we all know, some of the best areas in the economy in terms of their contribution to growth have been helped by migration, illegal and legal, leisure and hospitality, everything that feeds through to travel, the airlines business, hotels business. Like, unfortunately or unfortunately, migration is like what feeds that beast. And if we don't go into a recession, I could see a scenario where we start worrying about hoarding of employees again and people just not being able to get enough workers. And that was part of the inflationary spiral of the 2020 to 2023 era.
Yeah.
Do you worry about that? Do you think that's
Well,
inflationary?
I actually just have two counter perspectives.
Okay.
So first, I think it's definitely positive evidence that properly integrated my immigration works because that's Texas, right?
Yeah.
They welcome immigrants. But the difference is that I think a lot of the border crossings have not led to productive employment because, as you know, the employment rate of the migrant, the crossings is actually really low.
Yeah.
And so they're actually more of an institutional population. So the ratio, like if you look at hospitals or prisons, where someone's under care, one job is created to take care of like 10 institutionalized people.
Yeah.
So we've actually created wage inflation because the migrants.
Oh, that's interesting.
Because you have to house them, because you didn't construct facilities, you had to rent hotels, and you had to hire workers to actually manage all these people, and then
to
you have
hire
to provide-
workers to deal with migrants who are not
Yeah.
coming into the country and getting jobs.
And then you have to give them EBT cards, so it's actually all inflationary.
Yeah.
Italy reduced their border crossings, and it had the same profile of not highly employed crossings, and their economy is doing better.
Okay.
And actually, it's not led to inflation. It's actually led to improved growth.
That's a wrap for today's video. But now we want to hear from you. Do you really see Bitcoin hitting $5 million by 2027? And what about Trump's immigration policy? Could it impact productivity in key industries? Drop your thoughts in the comments below. We'd love to know what you think. If you enjoyed this content, don't forget to like the video, share it with someone who needs to see it, and subscribe if you haven't already. We bring you high-impact insights on crypto, stocks, and the market trends shaping the future. Thanks for watching, and we'll see you in the next one.